Good morning, everyone. I'm Mike McCleary from Marine Money, and it's a pleasure to welcome you to our 23rd annual Norway Ship and Offshore Finance Forum virtual interlude version. If you've been with us before, it's great to have you here again. And if it's your first Marine Money experience, we're glad you made it, and we hope it will be the first of many times we're together. It's fair to say that we wish we were in Oslo right now, where we've been for the last 22 years at this time of year. We would be sitting in the Hotel Continental, having just had a cup of coffee with old friends, looking forward to our first speakers of the day and to a reception later on, perhaps at the rooftop of the bar offices in Tujuvholmen. And I would be mispronouncing other words as well. Tujuvholmen. Maybe we really needed that coffee after staying too long at Solsiden last night for the speaker's dinner. I don't know. These are both great memories and things to look forward to again, and we can't wait. In fact, we haven't waited. Today, we've captured some of that feeling on our program and certainly captured some of the essence of what we do, introducing ship owners and capital providers and identifying the right fit between owners and different types of capital is part of the foundation of Marine Money. In that respect, our first panel is a bullseye. We also seek to share multiple perspectives on the market so participants can make more informed decisions. Hearing about the oil market with a read through on the tanker demand from the chief economist at Aker is a great example of that. Before we begin, I'd like to thank our sponsors, BAR and Seward and Kissel. BAR is clearly acknowledged as one of the elite firms in Norway and across the Nordic region, consistently ranked top in the major national and international legal categories and league tables across the board, and regularly recognized in major awards. The name BAR is synonymous with many of the groundbreaking firsts in the market, creating precedents for the future. And Seward and Kissel enjoys a global reputation as the go-to US law firm in the maritime area. With more than 50 attorneys in the maritime practice, they serve as trusted advisors to many of the world's most notable public and private maritime companies, financial institutions, and other industry participants in the areas of banking and finance, capital markets, M&A, private equity, restructuring, and more, and have handled many of the biggest, most complex and innovative transactions in the US and around the globe. We're enormously grateful for both of their support over many years, and especially during this particularly challenging period we're in. And with that, it's a pleasure to begin today's program by introducing session one. First, to let you know how to ask questions, and then to introduce our discussion leader, Mike Timpone. A slide is going to pop up right now that's going to tell you how to ask a question in the chat. So you can push that little orange arrow and it will open up a control panel, and you ask questions in the area that says ask questions here. With that, I'd like to introduce our moderator, Mike Timpone, a partner in the corporate finance and business transactions groups at Seward and Kissel, and the head of the firm's transportation finance group. Among many associations and memberships, Mike is the immediate past chair of the Marine Financing Committee for the Maritime Law Association of the United States. Mike, thank you.
Thanks, Mike. I appreciate the intro and the invitation, and you guys pulling this together. Like you, I look forward to seeing everybody in Norway and around the globe soon. But very much appreciate you putting these together and keeping us all together the best we can, given the circumstances, and of course staying on the cutting edge. Today we're talking about new money for shipping, and we'll be talking to a pretty esteemed panel here, and I think we'll be spending some time, at least, if not most, focusing on opportunities in the green space, which is really, one of the things that people are focused on right now. So without further ado, I'll just go ahead and introduce the panel, and then as we proceed one by one, each panelist will put on a brief presentation, a description of what they're doing, and then we'll go into some questions. So we start with Menno van Lacum, who's from the Green Shipping Fund. Menno is a transportation and structured debt and equity expert. He holds several board positions and a master's degree in economics from the University of Amsterdam. The Green Shipping Fund is a $400 million private debt fund that provides shipowner loans for new and existing vessels or retrofits that comply with their ESG criteria, which I think we'll get into, and lower the emissions in order to meet IMO 2030 and 2050 goals and the EU Green Deal, thereby assisting ship owners on their journey to make zero emission shipping a reality. Prow Capital is the management company of Green Shipping Fund. Our next panelist is Ulrik Engelschiøn of Viridis Capital. Ulrik holds an MSc in Naval Architecture and has more than 15 years experience in the offshore and shipping sectors, covering everything from technical compliance, sale and purchase, new build, financing, and restructuring. Viridis Capital is a leasing provider that specializes in financing of capital-intensive equipment that contributes to the green transformation. Working with their vendor partners and customers to tailor solutions that are both flexible and simple in order to ensure that customers can use the latest technology, manage financial risk, and retain optionality. And our last panelist is Torkell Vold from Storm Private Capital. Torkell has 24 years of asset management and origination experience. Prior to Storm Capital, Torkell was a maritime banker and holds a master's degree from the Norwegian School of Management and an MBA from the Bocconi School of Management. Storm Private Capital is part of Storm Capital Management, an Oslo-based asset manager, best known for its bond fund, which they have managed since 2008. Storm makes privately negotiated, senior and subordinated credit investments in the ocean industries, namely aquaculture, industrial shipping, offshore energy, all with a Nordic and infrastructure focus. If we can kick off the presentation, I'd like to start with Menno, and I will disappear and Menno can come on and present his slides.
Mike, thanks very much for the introduction, and happy to spend a few minutes with you guys on our new initiative. It's called, like you said, the Green Shipping Fund. I think it's good to have a little bit of a disclaimer that we are not necessarily close yet. We are in the final stages of working towards the end, and we expect to launch the fund in the next 4 to 6 weeks. The Green Shipping Fund has been founded by Prow Capital, which is a new established management company founded by a group of seasoned maritime and sustainability professionals. Why we feel pretty confident that we are going to close is because we have signed a letter of intent with a top 5 European bank, and we're currently in the final stages of documenting this initial debt fund, which hopefully is going to be the first fund in a series of funds. And this fund will be called the Green Shipping Fund. Maybe a little bit of background on the rationale why this group of seasoned professionals decided to group together and kick this off. I think that we collectively acknowledged the challenge that the shipping industry is facing. Regulations, think about the IMO, think about the EU Taxonomy, local laws are continuously changing and increasing. There is on top of that increasing pressure from banks, investors, customers, consumers. Combine that with the retrenchment of certain traditional capital providers, especially here in Europe, and then combine all that together with the uncertainty around what technology is going to be the fuel of choice. So with so many challenges ahead, we believe it is going to be an extremely transitional period for shipping with an immediate need for capital. Knowing that shipping is the greenest form of transportation per ton mile, and seeing the fact that 80 to 90% of all goods worldwide are transported by vessel or ship, I think it is paramount that there's no alternative for shipping. Shipping is there to stay, and it's not going to change. And in order to face the climate challenges ahead and to comply with the 2050 decarbonization target, and also I think combining with the expected carbon pricing that we will all face, I think altogether we estimate, or at least the expert estimate, that it's going to be a multi-trillion-dollar is required to make this transition. And the real purpose of the Green Shipping Fund is to assist the shipping industry by providing capital and knowledge towards this transition to a zero-emission shipping industry. I think so that's a little bit about the background, the rationale, and I think it's maybe helpful to give you a couple of characteristics, how the $400 million debt fund will look like. As a matter of fact, I'm saying dollars, but it is a euro fund, but also dollar availability. It's going to be a focus on European customers, borrowers, including Switzerland, England, and the Nordics. Typical deal size will be between the 10 and 25 million euros. There are exceptions, but because of sort of the concentration limits, I think the sweet spot will be there. Senior debt will be secured by typical mortgages, so it's traditional senior debt. Tenor of the deals will be between the 7 and 9 years. We are pretty agnostic as it pertains to the asset class. Offshore, dry bulk, containers, we don't really make a big distinction there. And the pricing, important component, is comparable to what the traditional commercial banks are pricing their deals today. It could be new builds, could be existing vessels, could be retrofits. So I think from that perspective, it's pretty much a mixed bag fleet that we can finance, provided there is the green component and the green element to it. And so maybe a few final words on the eligibility criteria and our definition of green. In general, we will apply a holistic view, and we will support small, medium, also larger size corporations, companies that have an intrinsic motivation to comply with the decarbonization targets. We really would like to work together with the thought leaders in this respect. And so what we've done is we've defined a scorecard with certain technical and non-technical parameters. But I think in general, we can say for a vessel to become eligible, it needs a minimum of an EEDI, which is 20% below the EEDI requirement currently imposed by the IMO. And on top of that, we can do coal, we can do oil, but we cannot do vessels which are 100% dedicated towards these asset classes. So I think on that note, Mike, I give the floor back to you. Happy to answer some more questions, but I think this provides for a general framework.
Thanks very much, Menno. Ulrik, if you're prepared with your presentation, I'll pass it off to you. That's perfect.
All right, there we go. Good morning and good afternoon, everyone. I'm quite excited about this. I'm happy to be here to present Viridis. I put on my best suit for this event. Let's see if I can get this on a full screen here. Let's see. Well, there we go. This looks good, yeah?
Perfect.
All right, thank you. Well, Viridis Capital. First of all, my name is then Ulrik Engelschiøn. I am the current chairman in Viridis Capital. Viridis Capital was actually founded on the idea of supporting the green shift with attractive financing alternatives. Lease financing is widely available for, commercial ships, retail products, and so on, but not so much for all this kind of new green equipment that we are seeing. So we kind of wanted to do something with that. And for us, it actually started up together with Corvus Energy. Now, Corvus is a world-leading provider of energy storage systems, such as batteries. They are starting to enter into the fuel cell business as well. They wanted to offer their clients something a little bit more than just straight up purchase. So leasing is a good alternative. Now, Corvus being a manufacturer and supplier of such equipment, they are not a financial institution. On the other hand, the founding partners of Viridis, we have been doing leasing for more than a decade within the maritime industry and to a certain extent aviation. So we've kind of found out, okay, let's set up more of a pure play green leasing company. That's what we wanted to do. So there we go. We founded Viridis. And alongside, we also took with us or invited in an industrial partner called Grieg Edge. So we get a little bit more back to that. So anyway, a small disclaimer, some safe harbor statements here. You can all read that later. Let's move forward here. I mean, we have seen that the speed of technology development and the change in green industry has never been higher. The ESG compliant solutions and products, we feel that they must go hand in hand with the financial industry that also understands the challenges and are to a certain extent willing to share some of the risk. I believe that's something where a hole that we definitely can fill in with how we are set up and with the people behind Viridis. Nevertheless, we are a privately owned company. We are a Norwegian company. We specialized in capital intensive equipment to support the green transformation. I think most of this has also been said by you, Mike. So a little bit behind the scenes here. I mentioned that we are 3 lease finance veterans behind the company, and we also then have Grieg Edge as a partner and co-owner. Grieg Edge is the innovation and green business development of the Grieg Group. So we are very happy to have them as a significant owner and partner of our company. Moving then just a bit over to the people behind, because I think this is quite important for us as a company, as we are dealing, not only with kind of more liquid assets as we've done before. This is a bit more complex when we're moving over to the equipment part of it. It's not that liquid at all. Should anything go wrong, you cannot just put an add-on and sell it. So I think you have to understand really your client needs and how to mitigate risk. So we feel that with our team, we are also able to do that. So nevertheless, the partners to the right is Paul Ulrik. Now Paul has been doing lease financing, I think, since 2010, when he started up with introducing Chinese leasing banks into the international shipping industry. So he were also a founding shareholder of Maritime Merchant Bank, and he is a founding shareholder of Maritime Asset Partners MAP, which is also a quite significant leasing platform. In the middle, it's Anders Skav. Now Anders has even more experience in the leasing industry than Paul, and he's also the founding partner of North Cape Capital. North Cape Capital is probably the most successful lease arranger out there, and they have been behind, I don't know how much, but it's quite a significant amount of leasing capital going into international shipping and aviation industry. Then we have Jan Øyvind Svardal from Grieg Edge. He's our real technical alibi. He's been the technical specialist in the Grieg Group for a number of years, so we are very happy to have him there. And it's Nikolai Grieg, which is the CEO of Grieg Edge. To the left, it's myself. I think for us, I can actually put off the presentation. We are not a fund, which varies a little bit from the other guys. I guess we are a direct lender. We are not limited in capacity. We do have several capital sources, which includes, of course, the partners, third-party investors, and not at least banks and other lending institutions. We feel that ESG related lending is well, it is a new game. It's a bit of a dynamic game also. The premises are changing, and so how to cope with that, it's also something. First of all, the company, we have to decide what kind of equipment do we feel is within that ESG envelope and what is not. So obviously we are spending a lot of time on that. Our sweet spot, I guess, the equipment that we tend to cover, being whether it's battery packages or it's hydro equipment, or it can be fuel cells, you name it. Well, that's normally in between maybe from $1 to $10 million. So we may say that's our sweet spot. That said, we are happy to look at larger tickets as well. We could also look at not necessarily equipment. It could be vessels, it could be others, but I think that then it must be, for example, an electric boat. We could definitely do that. We will probably not do a hybrid type of PSV, because that's also something which is supporting the oil industry, and that would not fall within our ESG envelope. We will not do LNG, but we could do hydrogen powered ships, for example. So yeah. We also in fairly close dialogue with kind of Norwegian government grant funds such as Enova. They have their definitions on what they are supporting, and very often we see that the clients we are discussing with are eligible for having Enova support for whether it's battery packages or whatever they are investing in to meet the green shift. I mentioned a little bit about managing risk, and coming from more of a maritime sector and lease provider of, for example, of commercial ships. Well, of course, you need to mitigate your risk. But that being said, it's kind of simpler, because, okay, you may say that it's always a residual value there. On the equipment, we of course feel that there is not so much of a necessarily a residual value. Well, there is, but it's not really liquid. So how do you cope with that? Well, we work very closely with vendors, suppliers, of course, with the clients, and possible others to understand a whole project, to understand our clients' needs, to understand the future need of this equipment, and possibly also how to dispose it should we end up with this equipment at our hands. We think this is a really important part to be able to be a long-term player in this industry. So I guess that's in short Viridis. We are very excited about this new initiative. We are a newly established company, and we also see that this market here is fairly, the ESG market is fairly kind of new on the financing side. So we're looking forward being a solid partner for our clients and be there to support their needs. So with that, I thank you all for the time.
Thank you very much, Ulrik. Appreciate it. Torkell, are you ready to go? Fantastic. I'll hand it off to Torkell now.
Thanks to Marine Money. Thanks to Marine Money, and it's good to be included. As Mike started with, just see if I can get up the screen here, on the correct screen. Is it working?
Yes.
Yeah, as Mike said in the beginning, Storm Private Capital is part of Storm, which is known for its Nordic bond fund and the strong investor base in both in Switzerland and Norway. Storm Private Capital consists of myself, Thomas Pedersen, and Christopher Eden. The three of us know each other well. We have been working together since 2014. when we raised 400 million credit fund for OMP High Division and deployed that over 3-4 years. In Storm, we do privately negotiated credit investments. We have an infrastructure angle and a focus on the Nordics and the ocean industry in the Nordics, which will be industrial shipping, offshore energy, and aquaculture. Aquaculture for us will be financing of vessel utilized for salmon farms. We focus on investments that give us mid to high single-digit returns. So that will be both senior and subordinated investment, but with an infrastructure angle. This is maybe a bit less juicy than others, but probably what we have is a lower risk profile, given the focus on the infrastructure. And with infrastructure, we mean either long-term contracts where the asset becomes an integral part of the value chain, or long-term contracts to utilities, old major, or larger end user, for example, in the fish farming industries. It's an exciting time to work within alternative maritime finance. Asset finance in general, and shipping finance in particular, has seen a declining trend since the financial crisis, with European banks no longer dominant. And we expect that maritime finance will follow the same path as we have seen both for rail and aviation, where alternative finance grew from a quarter of the market 20 years ago to now being the dominant suppliers of finance for those two industries. As a cyclical overlay, we see the energy transition. Energy transition have just started, and we expect to see that this trend will retire a lot of assets before the expected economic lifetime. LNG is a good example of that. It's a sector we've been working a lot over the last year. And here we see that operators are favoring new buildings and spooking the prospects for use of optional periods for the legacy assets. But the environmental focus is not a revolution. It is rather an evolution, or in the word energy transition. What we do see is the requirement of end users today to demonstrate that they are on the path to meet zero carbon emission. And the players, and particularly the end user of the assets, they cannot wait until the technology is commercially available. So for example, in the aquaculture segment, we see that the designs are now ready for zero emission propulsion, whereas no real solution exists for that at the moment. Our assessment is that regulation is one thing. Regulation is what everybody's talking about. And what is more important is access to finance. And those that are not able to show that they have a decent way to report how much they pollute and a plan for improving that, they're going to struggle to raise finance. And that is a key credit measure for us to understand that these clients of ours really understand that what they have to do in order not to fall behind. The third point is, and a little bit of a wild card, is the end client demands. And we think that this is the factor that will come first. And we see it dealing with the old majors on the LNG side. For example, LNG vessels with high fuel consumption, the typically is not a price, because these end clients, they have communicated how much they're polluting, and they have made plans and objectives to reduce this, and they need to then get hold of the new assets. We are based in Oslo, and we have a Nordic focus. Here we are able to generate deal flow, permitting selection. It also helps that the Nordic operators are at the forefront of the energy transition. They are greatly helped here by the public-private partnerships, allowing for commercially viable development of energy transition technologies. A good example of this is the Longship carbon capture project, where the Norwegian state and Equinor has gone together and started the carbon capture storage value chain project with a budget of $3 billion. We believe that this project will have competitive advantages when increased carbon pricing develops onto the global scale. It involves CO2 gas, and this is something that we're looking at. So I guess we should open up for questions.
Great, thank you very much. If I could ask you to shut down the presentation and ask Menno and Ulrik to rejoin video and sound. I just need Torkell to hop back on with us and we'll be all set. Well, perfect. Thanks very much. Guys, that was great. I appreciate all of you taking the time to do that. And we'll start with some questions about just the process maybe of you know, launching a new fund, lending, leasing platform. You know, all of these are new initiatives. So I guess a little bit of background from each of you on you know, maybe what you were doing before this and how you came up with the idea. Because this is how I'm viewing you on my screen, I think I'll just start with Menno, if that's okay.
Sure, no problem. No, I've been a long-term banker, and I think I see some logos. Used to be in ABN AMRO, Mace Pearson before those days, but that tells something about my age, I guess. So always been in asset-backed finance, maritime industries, asset-backed financing, securitizations, debt and equity solutions. So that was until 2011, my main career. 2011, we started our first equity fund, typically on the container side on the rail cars, securitization style assets. We liquidated part of it in 2017, and then we came to the conclusion, and my colleagues from the Nordics were already much further than we in the Netherlands, but we finally came to the conclusion that in the European Union, in the Netherlands, there was already retrenchment of capital from the traditional sources in combination with tremendous pressure that came up from you know, from the regulators on the sustainability angle. And I think we all agree that 2 years ago it was still relatively new. Today, you know, there's no newspaper you can open up without this discussion. Even in the States, you know, Mr. Biden is really making an aggressive move on this. So I think it is now a worldwide problem, and that was really for us the reason, because shipping is so instrumental in the world. We felt it was a fantastic moment to really, you know, assist the shipping industry with our combined knowledge. I think Ulrik and Torkell did a great job on introducing the people. You can go to our website, proud-capital.com or greenshippingfund.com. You'll see the participants, and you'll see that there's a long history of people. And that was really the main reason, that we believe that collectively, with all the, you know, knowledge there is in the industry, collectively we have to make a push towards making the industry more neutral. And it will be a transition. There's no holy grail, so it's going to be a collective process.
Thanks very much. Ulrik?
Yeah, thank you. Well, I think I mentioned it somewhere, but you know, from background, from founding partners, we've been doing leasing for a number of years. Then mostly within shipping offshore, includes drilling rigs and you know, OSVs, but mainly shipping and also some aviation, in particular others from Norway. So we have quite, you know, leasing has been something we've been doing in our professional career for a long time. Now also looking at this green shift, we kind of wanted to do something there as well. And when when we started having discussions with Corvus, again, a company we know very well, and this was last fall, and they said, we would like to be able to offer something, alternative financing solutions to our clients, and we can compare it a bit with the car dealers. You go into a car dealer and you're talking to the salesman, and you decide for that BMW, you like the car, and then the car dealer asks you, well, what would you like to just purchase it? Do you need financing? Would you like to look at leasing? So there we go. We are kind of the leasing arm. So with that in mind, we formed the company and enter into an agreement with Corvus. It's not an exclusive agreement. That being said, we work very closely with them. But of course, we also look at other equipment than just what Corvus have. We look at every initiative that is out there for the maritime industry, but also for, again, we could do hydro type of equipment, floating, solar, whatever. But whatever is defined as being leasable equipment and being within the ESG envelope, as we feel it must be, we are happy to look at. So then we formed the company, which was, we were all quite eager to doing that, but we also realized that we would benefit from having an industrial partner with us. Three nice guys make a nice band, but we are just three guys. Well, we are not just three guys, but that being said, we are very happy to have Grieg Edge as our industrial partner with us, and to be able to, the network they have, all the technical experience and everything they can bring to the table is of high value to us. So that's basically how we formed the company, and that's where we are today. Still very newly established company, but we are we are happy to see that it's quite substantial amount of clients that we are in discussion with, and looking at what we can offer to them, which they feel is quite competitive, of course, to what else they have out there. In particular, when it comes to leasing, it's very often it will be kind of on a 100% basis, which means that it's no capex or very limited capex for our clients. They can basically take this over the OPEX, which is a huge advantage, in particular for clients within certain segments like OSV owners. I mean, they have been struggling for a number of years, of course. It's been a fairly bad market. It looks better now, but still there's some challenges there. For them, let's say they have a contract with Equinor, and in that contract is a requirement for having a hybrid setup PSV. Well, all right, you have a $2 million capex right away. For them to be able to do this over an OPEX instead is, of course, a huge advantage, and there we can come in and provide that.
Thank you. Torkell?
Thank you.
In Norway, I think about 10% of the workforce is involved in ocean industries. And when you look at people working in finance, like myself, Thomas, and Kristoffer, I think 50% of what's being done in finance in Norway, okay, if we take away the real estate maybe, is related to ocean industries. And myself, I've been working in leasing industry, financing assets on the Norwegian continental shelf in the 90s, and then working with big ticket leasing in the States, and working for a boutique Oceanic, both in London and Asia. The common history of Kristoffer, Thomas, and myself was started in 2014. Where we set up and raised money for a credit fund for high-tech vision called Offimmersion Partners as a deal fund. We raised 381 million, and we invested this in offshore oil and gas assets and industrial shipping assets. At that time, the idea was basically to capitalize on the retrenchment of the banks, but we still had access to finance. It was more access to 60% finance instead of 80% finance. So at that time, we target a junior junior financing fund that targeted returns in the double digit. When we now are looking at doing more investments to Storm Private Capital, we see that banks have substantially increased their pricing compared to before, and that there are a lack of financing for many projects and many operators. And we see that if we are to develop something long term, we should also go for senior debt finance. So we have kind of reduced our target returns and are looking for mid to high single returns, either on senior finance and then senior finance like unitranche style, where we go for maybe 80% of the capital needed, or where we assist clients to do projects where we take the union piece. And the Nordic focus is easy because we have our network here, and if you go to a small country on the west coast of Norway, you can probably count 5 ship owners, and behind that billions of backlog from investment grade counterparties like utilities and oil majors. So it's about working with that backlog and finding good solutions for it.
Thanks very much. Ulrik and Menno, both of your new projects have green in their name in one fashion or the other, maybe in Latin, maybe in English, but both have green in their name. And we're hearing so much today about EU taxonomy, and we're just wondering what metrics the EU is using to define green or a green vessel, and how are you both influenced or not by that definition, and what projects would qualify, and are they tied together, the EU taxonomy and your parameters for investment? I don't know if Ulrik, you would like to start, and then we'll go to Menno.
Yeah, sure. Well, the EU taxonomy and that ESG play which we see now, I feel it's quite complex, and it's not so clear, and I believe the whole picture is quite dynamic. It's going to change somewhat. What is a green ship? What is not a green ship? If you have a hydrogen fueled ship but you are transporting coal, well, you're not that green after all. So for us, we are mainly into the equipment side of it. So we will only support equipment which are then what we would say, call it 100% green. So, okay, battery, we feel that's definitely within. Fuel cell, yes. I said we could look at also vessels, we could do ships, but then it would need to be electrical ships or something like that. And that's basically, this is more a mandate we have put out for ourselves. That being said, down the road, perhaps we need to raise or want to raise a green bond. We want access to some kind of green financing or similar. Then it is of course very good if our portfolio is within this ESG envelope. So we strive to be there. I think we again put probably harsher limits on ourselves than what we necessarily need to do, but the equipment that we are supporting is definitely on the green side of it. So in that respect, we tend to do whatever we can to be within the ES or the S or the G. Absolutely. I mean, there's so many aspects into that.
Yeah, agreed. Menno, thoughts?
Yeah, maybe to add to that, and I think Ulrik is raising a couple of very good points, but it is, I think, one of the biggest threats for us as being new initiatives, but also for the large corporates. You know, you issue a green bond, how green is it? The definition that we have in shipping for green is different than a definition of shipping that, definition of green that an institutional investor has. So we need to have, I would say, more guidelines, a better framework about what is green and what's not. And to that point, I think the EU taxonomy, although I do appreciate it's a horrible document to read, but it does provide for, I'll say, a classification system that is there to protect, you know, private investors, public investors from greenwashing. It helps companies to plan the transition. It does mitigate market fragmentation, and I think it eventually helps shift investments where they're most needed. So we are looking pretty carefully to the EU taxonomy because there has to be some sort of a classification system worldwide to make sure that the investments are being directed the right way. So from that perspective, the EU taxonomy is definitely a metric that we find important. I think there are some technical and non-technical requirements from the EU taxonomy. From a non-technical side, there's the reporting, which is going to be really important. How do you report to your investors? And there are some more general definitions, as you know, do not do significant harm, which is more of an arbitrary, I would say, requirement. But the technical ones are, you know, and I won't go too much into detail, but basically what the EU taxonomy says, the EEDI of a vessel has to be at least 10% below the EEDI requirement from the IMO. So that is bottom line where they start measuring. And what we are saying with our new initiative, well, 10% is fine, but we want to be at least 20%. So we're a little bit more aggressive than the EU taxonomy. But what we do try is to report based upon the EU taxonomy, because I do think that in the long run, the financial institutions in the Netherlands, but also across Europe, will probably use the EU taxonomy as a default for their reporting mechanism and for compliance purposes. So I think for the shipping world as a whole, it is going to be an extremely important document to watch and to follow. And even though it's not final yet, and I think there's still a lot of loopholes in there, and there's also still a lot of reasons why it doesn't work, I think we should watch that process pretty carefully.
Thank you. And I know Mike is going to pop back in soon because amazingly we're already running close on time here. But Torkell, where does sustainability, you know, fit in storms, you know, parameters?
Well, as I mentioned, you know, we don't look upon it as a revolution. It's more like an evolution. It's a transition, energy transition, and you know, we are very concerned if our clients don't have proper reporting and are able to tell how much they pollute, because this is a complete requirement to get any kind of finance in the next few years. And furthermore, if they're not able to have a plan of how to improve upon these numbers. So, you know, that's very much of a kind of a credit consideration for our side, and we are there to kind of, you know, bridge finance in order to help them get there. So it's, you know, for us, it's a great opportunity, this energy transition.
Thank you. I know, like I said, Mike is going to pop any minute. There he is. I have 10 more questions. What are we doing?
I know. Do you want to do one speed question for each panelist, and then I'll move us to the next session.
All right, we're going to go with question number 8. Just each of you. Do you see your capital as part of a larger transaction, or you stand alone?
I'll start. It's going to be part of a series of new initiatives, series of funds.
Well, if I can follow, well, we are not a fund, so we are not kind of bound to any limits in that respect. We do kind of project by project. I wouldn't say without limitations, but our intention is to go without limitations. And as we are looking at smaller tickets as well, we need to have a quite significant amount of investments being done.
I mean, our sweet spot is investments of $30-40 million US, but we easily do the whole project if need be, and that's definitely a target to help clients to develop the entire project.
Great. Thank you.
Thank you, Mike, and thanks, panel. I'm already planning the reunion tour. We can get back together and keep going and hit those other questions. But thank you all very much, and thanks to the panel. We look forward to witnessing and hopefully contributing to your success in the years to come, and where possible, documenting and celebrating the transactions that you will conclude. So thank you all very, very much.